Hello and welcome to Money Matters TV. I'm Doug Hepburn, your host and owner of Hepburn Financial Advisors, a boutique wealth management firm located in Phoenixville, Pennsylvania. We provide business owners and entrepreneurs and successful families ideas to make smart choices about their money. I'm also an investment advisor, representative of and offering securities and advisory services through Cetera Advisors, LLC, member FINRA SIPC, a broker-dealer and registered investment advisor. Cetera is separately owned from any other named entity. I'd like to welcome my co-host today, Ernie Capizzi, a loan originator from Princeton Mortgage. Ernie, tell me something good in your world.
Well, I appreciate that, Doug. Thanks for the intro. We've got a lot of things going on here, Q2. We're only 5 days in. It's been a pretty good start to Q2 here locally. Open houses, tons of buyers coming through. It seems like our industry is really starting to move out of what was a less than positive Q1.
I can appreciate that. Yeah, I mean, with interest rates going up, everybody tried to buy up whatever supply was out there, and there wasn't much. And so it seems like rates have kind of come back down a little bit. Isn't that the case?
I love that you brought that up. It's actually one of my main topics for today. So this morning, I had somebody say to me, "Are rates 7%?" This is very unusual. Normally, people ask me if rates are lower than what they actually are. But today, somebody asked me if they were 7%. I believe this probably comes from the Fed rate hike 2 weeks ago. They think in their mind, they hear rate hike, they hear 0.25%, and they think rates have gone up as far as mortgages go. And we know that's short-term interest rates, not long-term interest rates. Our rates had already built that 0.25% in a month ago. So our rates have come down almost every single day since that day.
That's great. I'm glad you brought that up because it's actually a term that's known in behavioral finance, known as anchoring. And people have a tendency to get anchored on particular things. For example, everybody thought that rates were, really low a few months ago, and now they're through the roof. Well, the reality is, and Ken and I have talked about this in previous shows, back when we were younger, people were getting rates of 18% to buy a house, their first home. And so now to see rates at 6 or 7 is not that high compared to historical averages.
Yeah, absolutely. You're probably over the last 40 years, you're probably slightly below the average at today's interest rate.
That's great. Well, that's good news. And I know rates in some broader terms have actually come down. As you mentioned, the Fed only raised rates 0.25 point last month, with the expectation that any type of turmoil in the banking industry would have a negative effect on the economy to slow it down, so they wouldn't have to raise rates. That's my understanding, and that's what a lot of economists have predicted. Do you see the mortgage rates going up? And I ask that because the Fed dot plot is talking about short-term rates being over 5% by the end of the year, and they're still at 4.75. So that would imply that we're going to see rates go up for the rest of the year.
Yeah, I mean, I guess if they can't get inflation under control, that they would still be raising that the short-term, the Fed funds rate. But I think that we might actually see a little bit of relief in the mortgage industry. I think there's been enough negatives in the economy that maybe inflation might get itself under control a little bit, where we can get some relief. I had been talking about rates in the 5s all through the first quarter, and we had a really good opportunity to get there. They might not quite be there. Certain buyers, certain down payment levels, they could possibly get there, but we're still in that low 6% range for the average. But I'm probably not as positive. I read an article the other day that says that the average consumer believes that interest rates by 2024 will be 8%. I'm
Yeah.
not there yet.
Yeah. That's an interesting statistic. I would love to know what has people thinking that, because obviously the experts or most economists aren't necessarily predicting that. But you brought up some interesting points in terms of inflation. I have some numbers here that I think are interesting. One of them is that the producer price index, which is a leading economic indicator, apparently had its smallest increase in the past 22 months, which is pretty good. I mean, that's the price that producers pay for raw materials in order to make their goods and services for sale.
Mm-hmm.
So, if you're seeing the producer prices go down or not rise as quickly, there's a lot of thought that perhaps inflation has rolled over. And I think we're also seeing that in terms of consumer price index as well.
I think I've seen it at the store myself, whether it's Home Depot, which are those raw goods, or even a little bit at the grocery store too.
Yeah. Yeah. No. So that's all good news for anybody who's looking to buy a home. And right now, I mean, that's the biggest thing that's on people's minds. I mean, obviously the markets change, the stock market and the bond markets change every day, but for a lot of people, their largest investment is their home. So that's good stuff.
Yeah.
So, it's funny, just to pivot, we had a question from a viewer. Thomas Rothman of Philadelphia actually asked, are residential real estate home prices rising or dropping? Do you have a comment on that? What have you seen?
Oh yeah, I do too. And we're localized here, right? We're in the Tri-County area of Pennsylvania. But I also read an article the other day about how home prices were coming down. Almost every single area that they talked about was in the Midwest or in the West. So I'm living the East Coast property value dilemma, I guess you could say, where our home prices are not falling. I mean, if they're falling at all, it's in the 1% to 5% range, where I think nationally we're probably more down 10% in property value. So I think the East Coast is, at best, I could say, stable. And I wouldn't say that they're rising anymore. And maybe even in the luxury market, maybe you're seeing a little bit of downturn.
That makes a lot of sense. And those prices coming down are actually going to help with inflation, because the cost of real estate is a big factor in consumer price index.
Absolutely.
Great stuff. Well, if you'd like to get your question answered by Money Matters TV, here's how you do it.
You can have your questions answered on Money Matters. Please go to our website, money-matterstv.com. On our homepage, click on the banner on the right that says Send Us Your Questions. While you're on our website, you can find information about our hosts and guests, as well as show notes and links about this show and past shows. Money Matters is also available as a podcast on iTunes and Stitcher, so you can listen to Money Matters while you're on the go. That website address, again, is money, MONEY, -matters, MATTERS, TV.com.
Well, switching gears, we do a lot of work with business owners and entrepreneurs, and in today's environment, you find that if you have a good business and a good economy, things are going to run well. But it's times when the economy is under stress that you find out where the chinks in your armor are, where the pieces of your business may not necessarily be as efficient as they could be. So I'd like to introduce our guest today, which is Mark O'Donnell, the CEO of the EOS Worldwide. Now, Mark has a great background. He's an entrepreneur, had his own company with Azure, and they were in the life sciences business, owned a number of companies, and he was a board member. Mark, welcome to Money Matters TV.
Thanks, Doug. Thanks for having me.
Oh, glad you could make it. Tell us a little bit about your background, and because I think the viewers would like to know, one, about what is EOS.
Sure. So quick about my background. I've been an entrepreneur since about 2007. As you said, I started a company with my brother called Zur Group. It was a pharma and biotech services company. We grew that, and we really caught the entrepreneurial bug, and we found that we were a little bit succeeding in spite of ourselves. And so I started implementing a system called EOS, the Entrepreneurial Operating System, and we used that system to ultimately exit the day-to-day of the organization, sold it to private equity and a group of my partners. And I really became so passionate about the system, the process, and the community of other implementers, EOS implementers and entrepreneurs using the system. I became an EOS implementer for a few years, then became a coach and head coach, and ultimately became a visionary here at EOS Worldwide. And so what EOS is, again, it's the Entrepreneurial Operating System. It is a complete system with real world, simple, practical tools that help companies do three things that we call vision, traction, and healthy. So vision from the standpoint of getting the entrepreneur and their leadership team 100% on the same page with their vision, where they're going and how they're going to get there. And then traction is all about creating discipline and habits and accountability for executing on every aspect of that vision. And then healthy is creating really healthy, cohesive, and functional teams. And so that's what EOS does in a nutshell for each of the companies that we work with. And our typical client is an entrepreneurial business. It's 10 to 250 employees, really in that sweet spot for where most of entrepreneurs sit today. And we help them grow and get what they want from their business.
Mark, that's awesome. Let me pause you right there, because one of the things that I often run into is or hear is that anybody can be a consultant. You see these ads on Facebook or Instagram saying, become a consultant or a facilitator. But
Sure.
You're somebody who actually has the experience as an entrepreneur, not only running your own business, but also implementing EOS. And now you run EOS nationally.
Yeah.
Is that right?
Yeah, that's right. And about 80% of we have 650 EOS implementers around the world. We do business in 37 countries, and 80% of our EOS implementers are exited entrepreneurs. They've built and sold and exited their company in some way. And it's super important for people to bring all of that experience as we're coaching and mentoring and teaching the entrepreneurial leadership teams that we work with, that they're with someone who's been there and done that. This is not something you could just go and read a book and go do and be a facilitator off Instagram. Otherwise, we'd be afraid the results wouldn't be that great.
Right. It's not entrepreneur in a box.
It is not entrepreneur in a box. That is for sure. You cannot click an ad and pay a couple bucks and, hang a shingle.
Mark, Ernie here. How could a company
Ernie.
be resilient in this economy?
Yeah, and that's a great question. And there's a saying that goes, I know the Navy SEALs use it, and it comes from a Greek philosopher, which is that under pressure, people don't rise to the occasion. They sink to their lowest level of training and preparation. And one of the ways a company can become resilient is you have to prepare for it in the good times. You have to make sure that your vision is crystal clear. Your people are rowing in the same direction. You've defined your core values, and you've created, got all the right people in the right seat, like Jim Collins taught us. You're measuring the data in your organization. You have a complete pulse on your business. You are solving your issues at the root so they go away forever. You've created your franchise prototype, if you will. You have your processes documented, and everyone in your business is following them. And you're gaining lots of traction, and you're executing in 90-day world. and you have a very specific cadence and pulse, a battle rhythm, if you will, of how you execute on your vision day in and day out. And you have to be doing that from a habitual perspective throughout the entire organization. Otherwise, you really have no shot when the next global pandemic hits, hopefully not, or any other economic headwinds. I always like to say that profit covers over all sins and growth covers over all sins. And using a system to train and prepare for that is really how you build a resilient organization.
Great stuff. Great stuff. So, based on your experience with EOS Worldwide, what are some of the most common challenges that entrepreneurs are faced when managing their companies with 10 to 250 employees?
Yeah. So number one is when you take it from the perspective of the entrepreneur, the visionary leader of a company with 10 to 250 employees and bigger and smaller, it applies to them too, is the number one issue is people. They just don't listen. They don't get the job done. They don't meet the expectations. And so they tend to be really, really frustrated with their people. And it's not that they're bad people. It's just that they usually don't have the skills to lead and manage and hold them accountable. And so people is number one. Profit is another issue that comes up quite often, and lack of, if I'm not clear, they're just not making the money that they thought that they would. They have a sense of lack of control where they feel like the business is running them versus them running the business. And so really those are the top three things that we see comes up. And we surveyed our clients, a little over 4,000 of them, and 82% had people at the top of the list as the number one issue that they would love to solve.
Mark, how can EOS be adapted to the unique needs of a company?
Yeah. So EOS is an operating system. It's written in the book Traction by Gino Wickman, and it's been used. We've worked with 20,000 companies ourselves, and there's a little over 200,000 companies that have been using our tools. And so while it is a complete and holistic system, people tweak and change to their own unique needs, and they modify that because every business is like a snowflake. And you need to just be able to adjust the tools. We have 20 tools in our toolbox that our clients use, and they just adjust it to their own unique needs, whatever works for them, depending on your industry. What we found that is really interesting is that every company thinks they're different, and in a lot of ways, they are completely and utterly different than anyone else. But in probably 80%, they are just identical to everyone. They don't have to do too much modification to EOS, but in the points that they're different, they customize it to fit their own unique needs and their own unique business.
Mark, it's funny that you mentioned that because from my time in public accounting, we always ran into clients who said, my business is different from everybody else's.
Yeah.
But the reality is they all have debits and credits. They all have a balance sheet and income statement. So a lot of the accounting, there might be some unique things to a particular industry, but the reality is there's more similarities than there are differences.
No doubt.
One thing I wanted to riff on that you mentioned earlier is the importance of people and human capital. And, I've always told clients of mine that, your most valuable part of the business is not on the balance sheet. It's the people that make the money machine run. And if you don't have, as Jim Collins puts it, the right people in the right seats or the right people on the bus, then you're going to have problems. But, if you take the model from the E-Myth, where they talk about having repeatable processes and scaling everything, at a certain point the entrepreneur has to step away from doing the day-to-day things. How do you scale a business from going from 10 employees up to 250?
So scaling your people is very, very difficult. As you mentioned, the entrepreneur, they sort of tend to hire family and friends and just people that they know. And that is okay, but it's not intentional. It's not repeatable, and it's certainly not scalable. So if you want the sense of freedom that you dreamed of as an entrepreneur, stepping away from your business, you have to create an organization that every single person, that every team is self-motivated and self-managed. And so, well, how do you do that? We mentioned E-Myth and processes, and you need to create we call it core values, which have been used, many, many times, and they become maybe trite and overused a little bit. But you have to have a system that you're hiring, you're firing, you're reviewing, rewarding, and recognizing all of your people around a simple set of core values. And it's baked into your processes around doing recruiting in your job ads. It needs to be intentional. And then you have that complete system of rewarding and recognizing and coaching all of your people around those core values, where they start holding each other accountable. And it's almost a self-policing system. And the other components to that are, they have to, when you think about an entire organization that is growing and scaling, you're adding new people, you need to do it from an intentional perspective, that every seat that they sit in, you have a couple roles, 5 roles, expectations that you have for those seats that they sit in, and that you're hiring so they can meet them. And they get and they want and they have the capacity to do that job really, really well over time. And that's how you think about growing your company. That's how you think about adding people to your company. And that's really about building an intentional culture versus one that is maybe a happy accident or complete and utter chaos.
That makes a lot of sense. That makes a lot of
Mark,
sense.
I had one. How can EOS's the principles of EOS help a company in decision making and prioritization?
Yeah, that's a great question. Most leaders, managers, entrepreneurs, they just have 136 things going on simultaneously. And I think it was Greg McKeown from Essentialism. He talks about the disciplined pursuit of less but better. So the key is to take those 136 things, break them down to the root of each of those things. What is it at its root? And then prioritize it according to the vision for your organization, what you want to get out of it. And don't try to do the 23 things every single quarter. Less is more. Just do 3 to 7 really good things that will incrementally move your business forward, and it acts like compound interest in your business, and you get to achieve fantastic results with total clarity, eliminating confusion through the organization. You're just focused on the vital few.
Awesome.
It's funny that you mentioned that, because oftentimes I run into business owners, entrepreneurs who are more like firemen. They're running around putting fires out all the time. They're running. It's management by crisis, and if they haven't learned to delegate those things and get them off their place so they can focus on those things that are most important, that's when their businesses start to hit bumps in the road or ceilings of complexity. I guess when you do try and make that leap from being a firefighter to a well-oiled machine, you have to get good people in leadership positions. Do you have any recommendations for that?
I do, and I think it starts with a mindset. If you're running around putting out fires, you have the first question you have to ask who the arsonist is. And almost every time it is you. You're the arsonist. You're running around putting out, you're starting fires and putting them out.
Right.
And so you have to have the mindset that you're the problem. and you're the solution. It makes you feel really good, but it's not particularly helpful to grow an organization and to scale it. So what I think about is oftentimes Steve Jobs said it best when he said that you don't hire people to tell them what to do, you hire them to tell you what to do.
Sure.
And that takes a lot of courage for an entrepreneur to go hire someone that almost makes them feel inadequate. I mean, that to me, if I could get every person listening to this episode to go hire people that make them feel small because they're so good, they're doing great work for their organization. They're going to be blown away by what they can accomplish as a result of that.
That makes a lot of sense. Almost like servant leadership, right? Where you're actually working for the people who work for you. And also, making sure that you hire people that are smarter than you, because, they may have skills that you don't have. Great stuff.
Mark, to piggyback off of what Doug just said, how can entrepreneurs identify and develop strong leaders within their organization as they scale?
So this one is interesting. We've all heard of the Peter principle, and in scaling companies, the seat that your initial team is sitting in, the leaders, oftentimes they cannot grow faster than the business is growing. They can't keep up with the business. So the business really outgrows them. So number one is you got to make sure that your people have a tremendous learning capacity. And what we look at here at EOS Worldwide, there's a Strengths Finder, Clifton Strengths Finder. And we look for someone who has learner in their top 5, or certainly at least in their top 10, but preferably in their top 5. Because we know that a scaling and growing company, if they're going to be able to sit in that seat for a long period of time, they have to be fast learners. They have to be all in on growing with the organization. So once you have that psychological profile of a leader that can grow quickly along with you, or they've already been where you're trying to go, and that helps too. We take a lot of time just mentoring and truly delegating versus abdicating. I would never recommend an entrepreneur to just sort of toss it over the shelf and wonder if they caught it and they're just totally abdicating. You gotta, when you delegate something to someone, you hand it to them. You don't let go until you're sure they have it. That requires you to have a great onboarding program, that training program, to just really, really mentor, teach, and coach each of those leaders, because that's the future of your organization. It's the future valuation of your organization if you ever plan to sell it.
Makes a lot of sense.
Great stuff. Last question, Mark. What advice would you give to entrepreneurs who are struggling to maintain a balance between their personal and professional lives? And we're coming down to our last minute here. So if you can sum that up for us.
Sure. Number one is you deserve it. So you have to believe you deserve to live a life of freedom, to find that balance, to define your ideal life. And then we use a tool called Delegate and Elevate. And that's simply taking inventory of all the things you're doing and put in the top quadrant, which we call the things that you love and you're great at doing, that give you energy and give you freedom. And then you just delegate the rest. Find the right person, the right system, technology to delegate everything else to. And
Awesome.
Over time, you'll get where you want to go.
Thanks for tuning in to Money Matters TV, because your money matters.